Welcome to this week's Todd Talks. This week, I want to discuss with you how to take advantage of some opportunity in the market, specifically in the new construction home market. New construction right now, builders are offering an historical high level of incentives. I want to show you that. I want to sort of show you how that relates to the resale market, meaning going to buy an existing home, and how you can take advantage of these opportunities that currently exist. So let's start right here. This chart is showing you going all the way back to 2009. So let's set the table a little bit. What was happening in 08 and 09? For some of you, you might have been still in school, but for those of you that were, say, out of college by the time 08 hit, that was the housing crisis. Before that, you guys might remember your parents talking about that. But we had the housing crisis where values dipped 50%, inventory spiked to 18 months. There was a mass wave of foreclosures and short sales. All that happened. So when that was happening, these big builders, especially the big publicly traded builders, they have to stay in business. And it was a struggle because no one was buying homes. So how did they induce sales? How they induced sales was massively increasing incentives. So you can see in 09, it was up to almost 18%. Then it came down and it's sort of like 09 through 2011. So there's a long period of time. It was close to 12%. So that was what they were offering to induce sales. And then as the market improved, it quickly went down to like more of a historical norm, was about 5%. And that stayed here from 2012 all the way to the interest rate reduction during COVID. And if you look, ironically, in fact, let me make a comment about that. In 2012, I remember it was November of 2012. I remember the certain weekend that every client I had that was making offers suddenly called me on Monday and said, I didn't get the house. I got outbid. And I couldn't even believe it. What do you mean you got outbid? I got outbid. And like from that moment until COVID, we were in a seller's market. And then when COVID hit and interest rates went down into the 2s and 3s, we went into an extreme seller's market because everyone tried to jump in and buy a house. And so you can see during the COVID years how the incentives from the builders went down to only 1.5% of revenue. And then what happened right here? Rates spiked up. And now we're at 13% again. So we're at that same historical high right here as the housing crisis. And so here's the point of the chart. The point is that demand directly impacts the incentives. And this is true, by the way, of new construction and resale. New construction is great, but what if there's an area you want to buy where there isn't any new construction, there aren't anything available to buy a new construction? Then you have to go to the resale market. In the resale market right now, inventory is at also higher than it's not an historic high, but it's higher than it's been. There's more options to choose from. And let me tell you how it works. That first weekend that someone lists a property, they go live typically late Thursday night. They have an open house and a big marketing event. And if the house is priced right and in a hot market, like a little sub-market that's selling quickly, that house will sell usually that first weekend. But that's in the small minority of houses right now. What typically happens is the house makes it out that first weekend, then it makes it past the second weekend. Because the average days on market are close to 60 days from the time you list to sell. That's almost 2 months. And that whole time, guess what's happening? The seller is starting to become willing to do that same thing. So what's their percent on revenue? It means they take off their sales price, which is their revenue, and they give you an incentive. And typically you can get 3 to 5% on a resale, where right now you can get up to that 10 to 13%. And when I say 10 to 13% on a new home construction, what that usually means is they're going to give you, say, 5% off the price and then another 5% towards closing costs. And then we have an amazing product for new construction. I have one for resale. I have amazing products for everything. But I can then but any one of those scenarios, like you can take those incentives and create an amazing finance package by paying discount points to lower the rate, or doing a payment subsidy for any up to 3 years on your mortgage with a fixed rate, but a low starter rate where we actually pay part of your mortgage. All that's possible with using incentives. So why is this important? It points to what I've been talking about for a long time. The opportunity exists today to buy a house with all sorts of flexibility. If you have an existing house to sell, you can typically get a contingency offer accepted. That means the seller will typically accept your offer and wait for you to sell your house. When you see that market where the builders had at 1.5% or even at 5%, like that normal market, it's hard to do that. It's hard to do a contingency sale. It's much more difficult. And for all of you, even for first-time home buyers, you're able to go in on a resale market and in most cases get a significantly higher concession than you would in a normal market. As we see demand increase, those incentives will all fall. It'll become much more competitive. So the question is, what makes demand increase? And that's interest rates. So the mass public, as interest rates start to rise, they're trending down now a little bit, but as they start to, go down, and when they go below the average rate, published rate, below 6%, where there's a 5 handle in front of it, it's going to spark quite a bit of demand. And the problem with that is it's good. It's good in a lot of ways, but if you're wanting to buy a house, you're now having to compete with other buyers. So you might be thinking, well, I was waiting for the rates to fall, and yes, you maybe get a better interest rate, but you're going to probably pay more for that house and pay more out of pocket to get that house because you don't get those incentives. And the thing is, with the incentives I have right now, we could typically get you into a 5% or low 6% interest rate, depending on your loan type, like right now. So it's a great opportunity to buy. If you're looking at this and you're looking to buy or sell, or if you have a family member looking to buy or sell, if you're a realtor that have clients, I'm a certified mortgage planner. I do things differently than other lenders. I build a plan customized to your goals that fits perfectly with what you're looking to achieve financially, both from a budget point of view and a long-term wealth point of view. Give me a call. I'd love to be able to do a plan, and I hope you have a great day.